The downfall of Credit Suisse has been a topic of much speculation in financial circles for some time. The once mighty banking giant, which was formerly considered one of the most reliable and successful institutions in the world, has been in a state of decline for several years. But now, it appears, its time is up. On the 19th of March 2023, rival bank UBS, which is also based in Switzerland, revealed its plans to acquire Credit Suisse for 3 billion Swiss francs, around $3.25 billion US, following discussions with the Swiss government. The acquisition aims to prevent a complete failure of the bank, which would have caused serious problems for the global economy. So, what was it that ultimately led to the demise of Credit Suisse? What factors contributed to its downfall, and what lessons can we learn from its collapse? Here's everything you need to know. Credit Suisse was established way back in 1856, with the primary objective of financing Switzerland's railway system. The bank played a pivotal role in the development of Switzerland's electrical grid and the European rail network by issuing loans. In the 1900s, with the rise of the middle class and growing competition from other Swiss banks, including UBS, Credit Suisse shifted its focus to retail banking. During the late 20th and early 21st centuries, it acquired various other institutions and attracted major shareholders with the likes of Saudi National Bank, Qatar Investment Authority, and BlackRock, all holding significant shares. Credit Suisse was even able to ride out the 2007-2008 global financial crisis much better than other banks, although it did have to downsize its investment operations, lay off employees, and reduce its expenses. As recently as November 2022, Credit Suisse was listed as a global systemically important bank, or GSIB, by the Financial Stability Board, meaning it's a financial institution whose failure could trigger a financial crisis. This determination was made based on four main criteria: the bank's size, its cross-jurisdiction activity, complexity, and substitutability. GSIBs must maintain a higher capital level, capital surcharge, compared to other banks. So, how can such a large, important bank fail so spectacularly? Some analysts point to a lack of innovation and agility in the face of changing market conditions. Others point to a culture of risk-taking and a lack of proper risk management, which led to a series of disastrous investments and losses. Still, others have highlighted issues with leadership, including a failure to recognise and address systemic issues within the organisation. The truth is, Credit Suisse has been embroiled in a series of scandals in recent years, from tax evasion to spying and money laundering, all of which have damaged the bank financially, but more importantly, have destroyed its reputation. In 2007, two traders at Credit Suisse pleaded guilty to mismarking their securities positions, overvaluing them by $3 billion. This action was taken to avoid losses and boost the employees' year-end bonuses, with the New York Times referring to the fiasco as, quote, a brazen scheme to artificially increase the price of bonds on their books to create fictitious profits. In this instance, the bank itself was not charged, as the mismarking was discovered by Credit Suisse's external auditor during an audit. Following the discovery though, Credit Suisse took a $2.65 billion write-down. In 2016, Credit Suisse was fined $90 million by the US Securities and Exchange Commission for misrepresenting the performance of its wealth management business. The SEC found that Credit Suisse misled investors about the success of its business in order to boost its stock price. In 2018, Credit Suisse was embroiled in a spying scandal involving its former CEO, Tidjane Thiam. It was revealed that the bank had hired private investigators to follow and surveil a former executive who had left the bank to join a rival firm. The scandal led to Thiam's resignation and sparked an investigation by Swiss authorities into the bank's surveillance practices. 2021 brought yet more scandals to Credit Suisse's door, particularly after its involvement in the collapse of Greensill Capital, a supply chain finance company. Credit Suisse was one of the main investors in Greensill and provided financing for its operations. When Greensill collapsed in March 2021, Credit Suisse was left with billions of dollars in losses and faced scrutiny over its due diligence processes and risk management practices. Still, that was nothing compared to what happened in 2022. On February 7th that year, it was announced that Credit Suisse was to be tried in Switzerland's first ever criminal trial of a major bank. Swiss prosecutors claimed around 42 million Swiss francs, approximately $45 million in compensation from Credit Suisse, for allegedly enabling a Bulgarian cocaine trafficking gang to launder millions of euros in cash between 2004 and 2008. In June 2022, Credit Suisse and one of its former employees were found guilty by the Federal Criminal Court of Switzerland for insufficiently preventing the crime from happening. The court imposed a fine of 2 million Swiss francs and ordered the confiscation of assets worth more than 12 million Swiss francs held in accounts by the drug gang at the bank. The bank was also ordered to forfeit over 19 million Swiss francs, though Credit Suisse announced it would be appealing against the verdict. Also during February 2022, confidential information about 30,000 Credit Suisse clients holding more than 100 billion Swiss francs in accounts were disclosed to the Süddeutsche Zeitung, a major German newspaper, and subsequently referred to as Swiss secrets. The leaked accounts reportedly included individuals involved in human trafficking, torture, drug trafficking, and a Vatican-controlled account that allegedly invested 350 million euros fraudulently in London property. Credit Suisse responded quickly, denying any wrongdoing and expressing strong opposition to the allegations. The bank also faced heavy criticism for issuing legal requests to hedge funds and other investors, asking them to destroy documents linking Russian oligarchs to yacht loans following Swiss sanctions on Russia after it had invaded Ukraine. The US House Oversight Committee even launched an investigation into the bank's compliance with sanctions on Russian oligarchs and demanded any related documents. One of Credit Suisse's most notable controversies occurred in 2014 though, when the bank pleaded guilty to helping wealthy Americans evade taxes. Credit Suisse admitted to opening and maintaining secret Swiss bank accounts for US clients and providing services that allowed them to avoid paying taxes on their assets. The bank agreed to pay a $2.6 billion fine and entered into a deferred prosecution agreement with the US Department of Justice. Then, in 2022, it was announced that the US Department of Justice was conducting an investigation into whether Credit Suisse had continued to aid clients in concealing assets from tax authorities, in violation of the 2014 settlement. A report released by the Department of Justice in March 2023 confirmed significant breaches of the plea agreement, including an ongoing and potentially unlawful plot to conceal almost $100 million in secret offshore accounts owned by a single American family. Additionally, the investigation revealed new information about the extent to which Credit Suisse bankers aided and abetted the offshore tax evasion of US businessman Dan Horsky, who pleaded guilty to one of the largest criminal tax evasion cases in US history in 2016. The committee also requested that Credit Suisse provide information about other significant undeclared accounts owned by ultra-wealthy US citizens holding over $20 million at the bank. Following the investigation's conclusion, Credit Suisse disclosed to the committee it had discovered 23 such accounts, with additional reviews still ongoing. Based on the committee's findings, the total amount concealed in violation of Credit Suisse's 2014 plea agreement was in excess of $700 million. This long list of controversies raised serious questions about Credit Suisse's business practices and corporate culture, leading to condemnation for its lack of transparency and accountability. Then, in October of 2022, Credit Suisse's stocks were heavily impacted by rumours on social media predicting the downfall of the bank. Credit Suisse had already experienced significant losses in 2021 due to its various financial scandals, but now people were signalling the beginning of the end. Already facing a decline in trust from investors and customers, in 2022 the bank recorded its most significant loss since the global financial crisis. The failures of Silicon Valley Bank and Signature Bank heightened concerns about the strength of financial institutions, and Credit Suisse's credibility was further eroded after admitting to, quote, material weakness in its bookkeeping. A rise in interest rates diminishing the value of some financial assets was just another nail in the coffin. On March 19, 2023, Swiss investment bank UBS Group agreed to purchase Credit Suisse for 3 billion Swiss francs, around $3.2 billion in an all-stock deal which was facilitated by the government of Switzerland and the Swiss Financial Market Supervisory Authority. To aid the deal, the Swiss National Bank provided UBS with more than 100 billion Swiss francs in liquidity following its acquisition of Credit Suisse's operations. The Swiss government also issued a guarantee to UBS to cover short-term losses of up to 9 billion Swiss francs, while 16 billion Swiss francs of additional Tier 1 bonds were written off completely. Credit Suisse's value decreased by roughly 60% after the markets closed on March 17th. As a result, Credit Suisse shareholders saw a significant reduction in their holdings, receiving only 0.76 Swiss francs in UBS shares for each stock that was previously worth 1.86 Swiss francs. Moreover, those who own $17 billion worth of additional Tier 1 bonds, which are considered a riskier type of bank debt, will lose their entire investment, according to Swiss regulators. Remarkably, shareholders' approval is not even required for the deal to go ahead, as the Swiss government has agreed to modify the law to eliminate any doubts surrounding the transaction. In an official statement, the Swiss National Bank announced that the rescue would, quote, secure financial stability and protect the Swiss economy. The downfall of a storied institution like Credit Suisse serves as a cautionary tale for investors, regulators, and business leaders alike. It highlights the dangers of complacency, arrogance, and a lack of accountability, and underscores the importance of strong leadership, clear communication, and a commitment to ethical and responsible business practices.